So this is why I always say like the market moves the same. Nothing changes in the market because price action moves the same across all the time frames. The day time frame, the daily time frame, the weekly time frame, the 4 hour time frame, or whatever. You just need to know which time frames to use and what to look for in those time frames. So how banks determine the direction of the day is the same way they determine the direction of the week. So most of the time, if we expect price to be bullish, we're going to expect a bullish candlestick on the daily time frame, right? And on the daily time frame, one candlestick represents the whole day of price action. So we can drop down to the 15 minutes time frame, which is the time frame that we use to trade, to execute our trades, to see the price action for the day. So on the 15 minutes time frame, we see a lot of things. We see the Asian session, we see the London session, we see the New York session, and then we see the manipulations and everything else that they use in the 15 minutes time frame. But on the daily time frame, we just see one candlestick, right? So now what happens each and every single day? Let's say the market is bullish. We see, okay, the market is targeting the highs and the trend is bullish. And then we are in a bullish range right now. The market is just going up, it's just shooting up. So what we can expect price to do is to open for the day, right? They open midnight each and every single day. And then after opening, price is going to go lower to the lower side of the market, as you can see here. So during the Asian session and probably London session, but London session, that's where they form the low of the week. They're going to form the low of the week during London session. So price is going to drop to the lower side of the market just to form a low of the day. So once they form the low of the day, that's when the banks get in the market and they buy so that the market can expand to the upper side of the market, and then they close the day. So we're going to see price going to the lower side of the market, and then below here, guys, this is where you can buy. But the interbank strategy gives us the exact entry, which is this one here. That's the best part of using the strategies, because you're going to get the entries at the low of the day and at the highs of the day. This is why the strategy gives us the perfect entries. So most of the traders, they don't know how to actually determine the low of the day, where the low of the day is going to be and the high of the day is going to be. So with the interbank strategy, we use the interbank range and whatever that we use, the Fibonacci with the level set, and then it gives us the exact levels where the low of the day is likely going to form. So once that happens, the banks are going to buy exactly there. So this is manipulation. This week here from the opening price to the low of the day is manipulation. It's all manipulation. So when they move price lower, they want traders to think, okay, the market is going down, so we're going to sell for the day. And then after that, immediately from the low of the day, reverse price, and then the market expands to the bullish side. So you're going to get the opening price of the day. Price goes down, manipulate. Asian session, London session, and then low of the day is formed, and then price expands, goes to the upper side of the market just to form a high of the day. So opening price, low of the day, and then high of the day, and then after that we get a close. You see, so it's simple as that. And then the price action is going to look similar like this, but then it doesn't move in a straight line. It's just going to move like this. Your goal as a trader is to be like patient. You have to be patient, wait for the setups, wait for price to do what it wants to do, because price is going to move at its own time. So on a bullish day, we just expect price to move like this. If you know this, like you understand this concept here, you're going to know, okay, each and every single day when you go to the daily time frame, you're going to see, okay, the market is bullish, and then I expect bullish candlesticks. And then on the 15 minutes time frame, I already know that I'm looking for a bullish interbank bullish setup based on the direction of the daily time frame. So as simple as that, you have to align the two time frames just like that. And then once you see price crossing the opening price and then starting to trade above the opening price, that's your confirmation that the setup is very valid. And then you can hold it up until they form the high of the day. So when they want the market to be bullish, they're going to open, price moves to the lower side, manipulates, gives us the low of the week, low of the day, sorry. And then after giving us the low of the day, the interbank entry level, they're going to give us at 75% or the 100% interbank level. And then price is going to expand to the upper side of the market and continue until they close for the day. So it's just simple as that. You don't need to like complicate anything with trading. You just need to simplify everything. This is why in this mentorship, I'm just simplifying these things for you, because this is how I see the market each and every single day. That's why like I don't stress about many trades or where the market is going. I just know they're going to give me a setup at this time. And then once I see this, I get in the market. So it's just like this. On a bearish day, on the daily time frame, we're going to expect a bearish candlestick. They open and then price forms a high of the day. As you can see, high of the day. So it's the high of the day. After that, price trades lower to the market, expands to the lower side of the market. So every time after the opening price is just going to go up. Just starts trading up. This is where you're going to sell for the day at exactly the high of the day. And this is going to happen at 75% or 100% level. You're going to look for a confirmation, and then you're going to look for a rejection around those levels. And then this is a confirmation that the setup is valid once price crosses the opening price to the lower side of the market. So you know that the cells are in control of the market. And here, this is where you can sell. Anyway, here you can sell, guys. It's not many pips that risk. And then this range usually takes like, it's not gonna be like more than 100 pips or maybe 50 pips or whatever. But it depends on what you are trading. If you are trading something like gold moves a lot. But this setup is very, very valid. You just need to know, okay, once the high of the day is formed, that's when I enter the market. You don't enter the market before you see, before this week is completed and the manipulations are completed. And most of the time, after the opening price, you're going to get an aggressive move, just going up. That aggressive move, and it's going to be in 3 cycles, 1, 2, 3. And then after that, the drop, and then you're going to get the interbank level here. You see? And then after dropping, after price forms that, price is going to drop to the lower side of the market and then closes. The symbol forms a low, and then after that closes. And then we get the close of the day. And then, so basically you're going to catch the move from the high up to the low. And then the low is usually also formed at the interbank levels. So this is why this strategy is very, very, very good, because it gives you an entry, a perfect entry, and then it gives you a perfect exit, a perfect trade profit level also. Because once you've entered here, you can exit on the opposite side of the interbank levels. So the lower side of the interbank levels, at the 75% or 100%, you can exit your trades there. So that's how the banks set the direction each and every single day. Nothing changes, guys. You're just going to see price going up and down, confusing you, whatever. But the bottom line is that price moves like this. The candlesticks might not look like this each and every single day, but price moves like this. Just like that, like nothing changes in the market. It's just the same thing happening over and over again. You just need to see these things, you train yourself to see them, and then execute once you see them.